Hi, and welcome to Foreign Currencies with Scott. I'm your host, Scott. So, for our midweek video, not too much to show in charts, although I will have a little bit of a video after this to show what happened on Monday, Tuesday, and Wednesday. For our fund, we did no trading in those 3 days. I smile because Monday would have been a fantastic day and would have been a win, but somebody had a long weekend and slept in and did not get up at 3 a.m. on Monday morning with the London opening, and so missed that opportunity. But this is something else to keep in mind going forward, which is we have 5 days a week, every week. The only time the market ever gets slow is around Christmas and New Year's. No other holidays does it take off or get slow. So there is always another day to trade. We never regret missing one. You can just skip. It's totally fine. But for the purposes of, starting our $1,000 challenge, I was a little disappointed in myself, but that happens, and it's good that you see that that happens. You miss a day, that's fine. You just go back in the next day or whenever you're ready. Also, if you haven't traded in a while but you've been looking, you might start to think that you need to force a trade and say, oh, this is close enough to the parameters and the guidelines. Let's give it a try. Don't do that. Don't do that. Wait for the right trade and get in, and then we'll be able to keep that 50% track record at a minimum with the 1.5 ratio on take profit to stop loss. Okay, so I'm moving around a little bit when I do these videos on camera. As you can see, I still have absolutely no studio, and I'm not really putting much effort into this. I've been watching some videos on YouTube lately, and like newsy things, and they'll have on James Carville, and people are laughing at James Carville for all his expertise, so-called past expertise in politics. His video making is horrendous. It looks like he's doing his video out of a cave or a tunnel or something. So right now I'm, James Carville's down here. I'm like right here. So that'll be something that we'll work on as time goes on. But for those of you who know me, I've always been more of a substance guy than a presentation guy. But presentation here is important. So we will start working on it a bit, and these will get better over time. But the substance is always going to be there. That's what I'm about. We're going to be talking about trading foreign currencies and making money trading foreign currencies. So again, no change, no entries for our challenge through Wednesday trading. And on Sunday, we'll be able to revisit Thursday and Friday and see if we had any trades on those days, which are coming up. All right. Okay, that's it for now. Please watch the video to catch the setups and the results of the first 3 trading days of this week, just so that you can get more experience in seeing that. All right, until next time, I'm Scott, your host for Foreign Currencies with Scott. Bye-bye. All right, so we're going to review what happened in the first 3 trading days of this week, whether we had any possible entry points, and see what happened. So I'm starting with today. We're going to work our way backwards. And so let's just go back to that vertical line, which represents Tuesday night's New York close, and then the line above and below that we're trying to breach. So it does look like we did finally breach that line above at 2 a.m. You can see there. And then we breached it again just before 3 a.m. But then at 3 a.m., we were below that top line, meaning we were less than 30 pips away from the New York close. So that means to us, no trade is possible. Now, if you look at the chart here, you will see that just a few minutes before 3, we had breached the line. And then a little after 5, we went back and touched it at the New York close. So our method did work in a sense. We did go from 30 pips away and we did revisit the New York close. So that happened. However, at 3 a.m. when when London opened, we were below the line, and so we weren't 30 pips away. And we do not want to enter a trade that is less than 30 pips away from our take profit, because that will it will get into our desired minimum 1.5 ratio of win to loss. So it would dampen our ability to make money over the long term. So one could say, well, we could have entered this trade a little bit earlier than 3, and that is true. We'll talk about that at some point. Getting in earlier, we do have to watch very carefully the spread between the buy and the sell, which tend to be higher in the non-New York and non-London markets. But for now, we're keeping it simple and we're saying after 3 a.m. we did not breach, so we simply have no trade, even though the method did kind of pan out for the day. Okay, so now let's go back to Tuesday, and I'm going to go ahead and delete all of the Wednesday open lines. And actually, what let's do is let's just skip Tuesday. Tuesday was similar. There was no trade for us. What I'd prefer to do here to use the time is go back to Sunday and the close. So let's go ahead and draw a line in there. And we'll do a horizontal line here. Okay, so it was about here that we closed New York on Friday. So then on Sunday, the market opened, and I'm not going to bother to draw a vertical line here because it's just going to be moving to the right. But let's draw in our 30 above and 30 below just so that we have those. So the first line is at 91. So let's draw one 30 above, which is 21. So there's 21. Let's go up a little bit. Okay. And then let's draw one 30 below, which is 61. And again, if you're wondering what I'm talking about when I say those numbers, I'm looking at the left side of the screen now, the 3 rectangles we have for the numbers. The one in the middle is New York close, 134.91.8. So that represents $1.34 and 91.8 pips are what it would take to buy 1 British pound. So I'm saying 91 because it's 91.8 pips. So 30 pips below that is 61. Okay, so that's why I'm counting those numbers. 91 down to 61 and 91 up to 21 in the next penny, $1.35 rather than $1.34. All right, so let's look and see what happened after Sunday night into Monday's opening. So you can see we're dancing around that New York close, and then at 2 o'clock we breach below, and at 3 o'clock we are still below. We're still below, and we do have a green candle. So we would have entered probably right about at the low point of the green candle, which is to the right of the 3 a.m. vertical line, and the pair went back up. And as you can see, it almost hit there before 5 back to the New York close, but it did hit a little after 6 a.m. with that red candle and the wick pointing up there. So we were never, ever in jeopardy of going 20 pips below hitting our stop loss, and we would have made money. But as I admitted to on the on-camera portion of this video, I slept in, so we missed it. And that happens. So we missed what would have been a winning trade, but that's okay because there's always going to be another day to look for a trade and make a trade. So thank you for watching these. Keep that in mind. We never need to force a trade. If it's inconvenient to do so, just skip a day. If we haven't made a trade in a while, but we've been looking every day, don't force it. look look for a good trade based on our method. Okay? So we will check in again on Sunday and see what Thursday and Friday in the market had in store for us. Until then, I'm Scott for Foreign Currencies with Scott. Bye bye.